Hey guys, this lecture will focus on the current account. Now we know that the balance of payments, being the transaction between non-residents and the residents of Australia, can be split up into the current and the capital and financial accounts. So for this lecture we'll look at the current account in a lot of detail. So the balance of the current account records the day-to-day transactions between residents and non-residents. And this can be broken up into 4 separate different categories. So we're going to look at the first one, which is the major one, called the net goods. And this is basically all credit for goods, so exports, so credit minus debit for goods. So what goods include is, say, typical merchandise expenditure, so our exports, in other words. So for example, if the USA purchases $100 million worth of wheat, this is recorded as a credit in our net goods. And similarly, if Australia imported $100 million worth of cars from, say, Germany, this will represent a debit in the net goods part of the current account. Secondly, we have what is called net services. And now this is typically the same as goods, except instead of looking at tangible items such as wheat or cars, we're looking at services. And services include tourism, education, transportation, etc., etc. So again, we have credit minus debit for services. And again, this represents exports, which are credits, minus imports. Should have written that there as well. So exports minus imports as well for net goods, and exports minus imports for net services. So for example, say China, so Chinese residents, which are non-residents to Australia, come here for tourism. And to do that, they purchase, say, merchandise, or they purchase flights from Qantas, and this is represented as a credit in the net services account. And again, if Australian residents go to, say, the USA for university, this is recorded as a debit in the net services account. So debit. So now we know that what net goods and net services are. We'll just rub these out. And now we'll look at what is called net primary incomes. So number 3. So we're just going to note here, we've got net goods to net services. And now 3, we got net primary incomes. We're going to look at this here. Okay, so what are net primary incomes? This was previously called just net incomes, but now they've split it up into net primary and net secondary incomes, whereas secondary incomes was previously called net current transfers. So this is the difference between the value of income credits received from overseas such as wages, salaries, interest, and dividends. So income credits, which include incomes, salaries, interests, pension, wages, dividends, profit, minus the debits pertaining to the net incomes category, which include wages paid abroad, so this is wages again, interest, salaries, dividends, profit paid abroad. Now this net incomes category has a close correlation with the financial account, because in the financial account we record all the direct and portfolio investments, and you can go, if you look to the lecture on the capital and the financial account, you will go more into depth about this topic. But for now we know that net incomes paid on, say, dividends, interest, and profit of certain shares or securities is actually recorded in the day-to-day transactions between residents and non-residents, or in the current account. So net primary incomes pertains to the credits resulting in income transfers, salaries, interest, wages, dividends, and profits coming into the country, as opposed to, or minus, the debits which relate to the wages, interest, salaries, dividends, and profit going out of the country. So this is paid abroad, and this is paid from abroad. And finally, we have the net secondary incomes category, and this was previously called the net current transfers. But now they've renamed this to being net secondary incomes. So what does this refer to? It refers to the difference between the value of secondary income credits, such as non-life insurance transfers, such as pensions or goodwill gestures. So if you have like a family member overseas and you're transferring money to them, you're going to give them, say, e.g. money transfers and pensions. And so if we're giving people, if you say your resident lives in England, say your auntie, and your auntie sends money over here as a birthday present, this will be recorded as a credit in the net secondary incomes category. So secondary incomes are different from other transactions in that they are only one-way transactions with nothing exchanged in return. So as opposed to primary income transactions, salaries are paid in return for maybe labor resources. Interests are paid in return for securities bought. Services are paid in return for the services provided, and goods, the income is paid into the country to account for the goods provided. But net secondary incomes is different because there's no two-way street. There's only a one-way transaction. So if your auntie pays you from England, gives you $100 for your birthday, you don't have to give anything back. So that's the difference between net secondary incomes here and net primary incomes. So it includes money transfers, pensions, gifts, taxes, and other non-capital type aid. So non-capital type foreign aid. Just write foreign aid here. Foreign aid. Okay, so there are 4 different categories summing up the current account. So you've got net goods, net services, net primary incomes, and net secondary incomes. So the current account at the moment in Australia is in deficit. And this is primarily not because we have a debit in our net goods or a debit in our net services, because as we know, we're exporting a lot to China at the moment, but because of our net primary income. So this is the cause, or the major cause, of the current account deficit, which is debit, so CAD equals the debits exceeding credits in the current account. And because our investments prove so much more reliable, less risky than other investments in other countries, people overseas would tend to buy our bonds, and therefore when they buy our bonds we need to pay interest on the bonds. And so this is caused or recorded as a debit in the net primary incomes, which is a primary cause of the current account deficit. I will come back to the current account deficit a lot of times, or very often, in further lectures. So this is the lecture on the current account. It consists of net goods, net services, net primary incomes, and net secondary incomes.